So, what's up? I'm back. Late again, as always. But markets wait for the G, not the other way around. Okay, so all time highs to the 2.5 standard deviation zone. Bullish movement. Yesterday, it was perfect for an entry. I missed it. I was kind of thinking it could. I mean, I wasn't very, very, very confident. I needed to see um something else, and I'm going to explain to you why right now. So we got liquidity from Asia, liquidity from London, which got taken on New York, right? We leave this liquidity here. We go to the upside. We take this liquidity from London. From here, we start dumping, right? Okay, before this, look, we were here at market open. Okay, so we got this liquidity here. We got the Asia low and these two lows here. So I'm marking pretty much um the lowest one was the one which I was expecting to be taken, at least in one of the two uh indices, and then maybe make an SMT from there. So market opens, starts dumping, and I was like, man, I think around here I was thinking that I might have been missing a short, but I wasn't confident on taking shorts, and the reason was because only one liquidity. Uh, no, the reason was because we are in a higher, I mean, in a bullish higher time frame, so that's why I didn't want to take shorts. I have a bad experience doing that. I mean, I also have good experience, but I want to search for high probability setups. So price keeps falling. Once price comes to this candle, it doesn't take the sell side. And even if it did, S&P is way higher. So when price comes here and takes the sell side on Nasdaq, I was talking about maybe making an SMT from this low to this low, and if it wants to reverse from here directly, I was talking about that I wasn't going to be that much confident because the thing is, by experience, I can tell that a lot of times price comes down in both of the assets to take the liquidity. So it's kind of I'm just I don't know why. It's probably just from experience. I just don't expect any kind of SMT. So I was wanting to see price keep falling down here and then S&P take this liquidity, and then from here we could expect for a change in the state. But that wasn't the thing that I was. So stupid call. Faggots, nobody answers. So I was expecting price to fall down, take this liquidity. It didn't do it here, so I was hoping for price to keep falling down, which it did, as you can see. Uh, Starts going up. Okay, so I'll tell you what I'm seeing here. But I saw this. Mm, I saw this late, but this is actually good. So normally, that my setup, it's something. I mean, you see this leg. Imagine something like this, the same. Okay. So price keeps falling down, creates some form of liquidity here, keeps falling down, keeps falling down, keeps falling down, and one more leg to create then the change in state. Okay. Another thing that I could see is dump one leg up, dump once again to take this liquidity and to have a closer change in state. Okay. In this case, when we have a huge leg down like this one, you cannot expect price. I mean, you could expect price to do anything, but it's not very necessary to do this type of change of character. Okay, we could just start going up. So the change in state would be, you see this bearish movement here, that's the change in state. That's what I was thinking about, but I just wasn't confident enough. We got a lot of movement to the upside all of the week. I don't know, I just wasn't confident enough, but it was actually a nice entry. Okay, so here you have the change in state. So price goes up, comes down, change the state of delivery right there. And as soon as this candle comes back down, because this one was closed above the change in state, we enter here, stop losses there. The same for S&P. It was actually the same trade. It just had some different risk to reward, which was 1 to 3.04, 1 to 3.79. So Nasdaq was a better asset to take the trade. We got a lot of low resistance liquidity liquidity run here. We got this liquidity here. We got this one here. I was targeting at least this one. Why? Because in the 15-minute, look at the structure. This is the last leg. It's clearly going to go up into this first high. So this would be the first TP. The second TP here above this one. Why? Because I mean, bro, it's not gonna take the second one and reverse. It just needs to take the third one, unless we see some kind of divergence. That would be a good time to think about exiting. This Fibonacci was for continuing to the downside, which we don't need anymore because we're pretending to go long, right? And oh, what did I do? Fuck. S&P, please. Okay. So there it is. Comes back down, enters one more time, and it changes the state. So if you was late, you could have a second opportunity. And then really good trade. Really good trade, which I missed. Maybe a third TP. Sure. Fuck yes, why not? Where? Bro. I don't know. There. No, you know what? Let me hold on. Where could you put the third TP? You see, you take the last leg, standard deviation, and in the -2, 1 to 7 for the last 25% of the long. Let's see what happens. It probably hits it. This is, I don't give a fuck about this. It is what it is. Stops at break even. So this is a retracement on the higher time frame, okay? So if you want to see it on the 15-minute, it's just creating more structure to keep continuing up. If you do a Fibo from here to here, you see it gets back to the OTE zone. Okay, there it is. This is the OTE. From here it starts bouncing again. And Yeah, it's gonna probably hit. There it is. So now market open, 15-minute fair value gap, entering, rejecting. 5 minute. No, what is this? Is the 15-minute fair value gap? Okay. So price is entering, started rejecting. We have to see if it wants to hold. We nah, there's nothing for me here. I mean, I could enter uh long after I see a change in the state, which is made right there because we are in a fair value gap and price is very bullish. Today it's Friday. We might close bullish, we might close bearish. We're actually bouncing really strongly from here, so I could expect us to close bullish. So yeah, this is it. This is the setup for today. I'm not taking trades today because I want to see some form of liquidity get taken as it happened here. This was perfect. Absolutely, well, not absolutely perfect, just because of the reason that I told you that I don't see a change in the state first. I have to create in my head another false change in state, which is this one from this single down close candle. But when the movement is so strong to the downside, it is what it is. This is what you want to do. Uh, so yeah, lesson learned, and this is perfect. Actually, I've never been trading so good until I didn't start looking at the markets this way, like from abundance and not trying to catch every move. Just thinking about losing a trade was like, man, this could work. I should take it. And I was saying to myself, no, but let it go. If I mean, there will be more opportunities, right? If price leaves you and you don't feel your entry, fuck it. There will be more opportunities. And it's like I was trying to say that to myself, but deep inside I wasn't comfortable with that. So I was taking the trades, and right now I genuinely feel so graceful for not for missing this trade. I really genuinely think that I learned from this one. When you are negative with this type of things, you don't learn. When you see it from a positive perspective, somehow you fucking learn, man. You have to take the negativity out of your minds. That's the only problem you have, negativity and the scarcity and everything that comes along with that. You just have to see the things from abundance and be positive. Fuck the feelings and fuck the rigid strategies. I don't know how the fuck those rigid strategies work. I've been doing this for 5 fucking years, struggling so much, and all I can see is that when you just don't give a fuck, you somehow manage to make it. So yeah, kill, kill, or you won't make it. Until next time.